Would you like to learn how to use a really great call option strategy? Hi, I'm Larry Gaines, Power Cycle Trading, and in this video I'm going to show you a really nice strategy using call options. But the first thing it starts with is a directional trade setup. So first off, this is what we call our volatility scanner that I've created, and this scans for a certain chart pattern that we call a volatility squeeze. So it's when markets get real tight, the price action gets real coiled, and there's potential for a big break up or down. So one that we've been watching here for a few days has been BIDU, and you can see here BIDU, B-I-D-U, has been in the squeeze, a daily squeeze for 10 bars or 10 days. And it's green, which also shows potential for an upside movement based on the way that we've coded this scanner. So this is how we find most of our trades. So here's BIDU, and here's the trade setup. So first off, in this kind of market, you want to really go with long trades that are really set up and above their moving averages to make them fundamentally look, good as far as the structure, and then, short trades below the moving averages. So everything kind of fills that box. Check that box off. So you can see on the weekly time frame, BIDU is above, all the major moving averages, and also on the daily. Now this is a volatility squeeze. You see these dots. This is what we programmed into the system. So when the market gets in a certain coiled situation, we can spot that using our scanner, and then we can look for a trade setup to look for a breakout either up or down. In this situation, the breakout we were looking for is to the upside, because we've got a number of different signals here. We've got, this is a reversal, cycle reversal right here, this arrow, this is a new indicator, and then we've got momentum, so two momentum triggers to the upside, and you can see below here our momentum flow indicators, got 3 out of 4 time frames, solid, strong momentum. So when we look at that, then we look at the direction to be to the upside. So today we entered the trade using this other indicator, which is an opening range breakout indicator, and also a squeeze on the 30-minute chart. So here you can see the squeeze 30-minute, and here's the volatility squeeze here you can see with the dots. Now here's an opening range. We have an indicator that calculates using a formula the opening range, and a really good entry point is on a breakout of that opening range. So good volatility squeeze to propel it higher, breakout of the opening range. You can see positive momentum, cycle 1 and 2, momentum trigger here. So based on that, direction up, then the trade was to do a call debit spread. So trading is a process. The first is the direction, so direction up. So here you can see momentum trigger indicator. Now the next thing we want to do is look for target. So here's the prior high, 233, and then here's our second target, the 1272 at 238. So what we did was then a call debit spread for a target right before that 233, really tight, narrow spread, so very low risk in case this market decides to turn over. So it's been a real flaky market. So here's the trade setup. So our first target we're looking for is 233. So what we did is the September 15 series, 230, 232.5, vertical call debit spread, $2.50 wide. Set that up at $1 debit. So you can see here our potential risk is $1 to make 150. So 1.5, 1.5 to 1. So nice risk reward ratio. And you can see since we hit it, we got such a great entry at that opening range breakout. We've already got $40 profit. So 40% return already intraday. So this is a really nice trade setup, and this is a trade that's also easy to defend. So I hope that helps. I'll talk to you on my next video update.